Episode on smart money concepts trading model. Okay, this is Melody FS Academy, and if this is your first time of coming across this channel, please do well to subscribe, turn on the notification bell to get notified once we upload our weekly content. Okay, so in today's teaching we are going to be looking at equilibrium versus discount. Okay, so now we have actually talked about this in the 2022 mentorship series. Okay, we actually talk about equilibrium and discount, premium, and the rest. Okay, so now let's get down to this business. Now, equilibrium versus discount. After a market makes a run higher and begins to retrace lower, look for a drop below the 50% of the price run higher. Okay, and a drop below 50% or equilibrium indicates that price is now in a discount, and this frames our idea buy setups. Okay, so now talking about the concepts of discount in price. Okay, smart money looks to buy in discounts. Okay, smart money looks to buy in discount. In other words, it is more like when you go to a grocery shop or any of the supermarkets or stores or whatever, and you have been offered you have been offered a particular product at a discount price. Okay, so that is how the market is actually. Okay, so now how do we know that price is currently trading at some level of discount? Okay, how do we know price is being offered currently in a discount at a discount rate? Okay, so now looking at this move right here, we have this single price move right there. Okay, then we have this minor consolidation and the expansion, right? So now once this happened and the market is once the market starts retracing, once we enter the retracement level, okay, we take out our fib, measure the range. Okay, this will be our range, trading range low and the high. Okay, so now our attention is immediately drawn to the midpoint of the fib. Okay, so the movement below the midpoint or the 50% of the fib is which is our equilibrium. So the movement below that is actually indicates that price is currently trading at a discount level. Okay, and it can be bought it can be bought at that very moment. Okay, it's already, and actually it frames a buy setup scenario. Okay, so if smart money are actually looking to buy the markets, they buy at discounts. Okay, so we have to bear that in mind, that smart money always buy the market at discounts. Okay, we buy at discounts, and as you can see with our example right here, you can see we have this range expansion, then they move below the 50% level, right, and at the same time trades into this other block. Okay, so these are our other blocks, and at the same time trades into this imbalance. Okay, so this market is permitted to be bought higher, and as you can see, price eventually is bought higher. Smart money placed more buy entry right here. Okay, so the purpose of this is that we are not trying to always capture this move. This is where we are trying to get in the market, because once we have an idea of consolidation, which is the accumulation, then we have the manipulation, right? A move below to take out sell side liquidity and pair their long entry. Okay, so now it is practically impossible to get in on this move, on this expansion. Okay, it is practically impossible to get in on this move. Okay, so the best thing as smart money traders, as us following the footprints left behind by the smart money traders, by smart money, is to get in on the retracement. Okay, so this is how we get in. Okay, we look to buy the market back at at a discount price. Okay, so which is eventually what we can see right here. Okay, so it is basically sometimes it's very possible to get in on the move. Although the 2022 mentorship have, you know, have shown it by teaching us about going down the lower time frame once we have some run on liquidity. I've discovered that, you know, ICT is always working up the model and adding things as time goes on. Okay, so this would have probably be a run on the first swing low prior to the London session opening, and would have gotten in right there. So before now it would have been impossible to get in right there, but I think the 2022 mentorship have, you know, proved that statement wrong, and we could have literally got our entry below that. Okay, so but this is how they will frame the market on a discount, or rather how we buy the market in a discount price, at a discount price. This is how smart money buys the market at a discount price. Okay, so smart money accumulated long position, and in order to place more positions they are going to wait for price to get to some level of discount. So now looking at the range, that will be probably below our 50%, which is the midpoint, which is our equilibrium. Okay, so once price trades below the 50% level, that is our discount market right there. Okay, so this frames our idea for buy setups. This frames ID buy setups. Okay, so now the concept of premium after a market run makes a run lower. In this case you can see we make a run lower and begins to retrace. Okay, and begins to retrace higher. Look for a rise above the 50% of the price run lower. A rise above the 50% or equilibrium indicates that price is now in a premium. Then this frames ideas sell setups. Okay, so now the concept of smart money wanted to, you know, place more sell orders. You are going to look to place in more sell orders at premium. Okay, so we buy at discounts and we sell at premium. Okay, we sell to the highest bidders. That's the, because probably we have buy stops resting above here. Okay, so this old high is probably above the 50% level. Okay, so the buy stops of those that was initially resting above this old high is going to get tapped in. So these are willing buyers, people that are willing to buy this at a high price. Okay, willing buyers. So smart money are going to sell to them, and, you know, the price is obviously going to go in the other direction. Okay, so smart money looks for traders, for willing buyers, for retail traders that are willing to buy at high prices. Okay, so the best spot to find them is at premium. Okay, which is above the 50% level. So these are traders that are willing to buy at high prices. We have this old high, we have this imbalance right there. Okay, so price trades into it, close it, and trades off. Okay, and okay, so that is just how we identify our premium markets. Okay, so now the next thing we are going to be looking at right now are liquidity voids. Okay, after a sharp run in price, the last candles that form are the least efficiently trades in the range. Sudden price rush, sudden runs in price belief, curious price action that tends to fill in at a later time. Okay, this is described as a void of market liquidity or liquidity void. Okay, we also talked about this in the previous episode. So when we have sharp runs, sharp surges in price, the market is going to, the algorithm rather is going to tend to retrace back to those levels and reprice the market. Okay, it's going to reprice it. Okay, thereby you know, filling the void and offering the buy side that was not efficiently offered the time of this transaction. Okay, so that is just that. Now we're going to talk about fair valuation. Fair valuation, when price trades back inside its current range and returns to the level it recently moved from. This is fair valuation. Okay, smart money will unload short positions in this area and many times establish new longs. Then these are also good location to take profits on the short positions and not require a move outside the current trading range. Okay, so now the process of price going back into this Now the process of price coming trading back into this range is known as fair valuation. Okay, so probably join our fib, this will be our midpoint right here. Okay, so price is going to seek for liquidity, is going to seek for those that are willing to buy, or rather that are willing to sell at very cheap price, okay, which is below this old low right now, and at the same time trades into this other block. Okay, this is known as fair valuation. Okay, so fair valuations, smart money will definitely upload, will unload their short position, okay, which they acquire up here probably, and many times they are going to establish long new entries, okay, which as you can see they bought some new position right here, and price went off and they offload it right here. Okay, so that is fair valuation. Now fair value gap, obviously these are some of the things we have covered mostly the uh on the 2022 mentorship. Okay, and I just add them to show you the importance of how they are smart money in smart money trading model. Okay, so now when price leave a specific level and only has a small section of price action that is seen as one directional, this is known as a fair value gap. Okay, it is very similar to what is traditionally known as a common gap in technical analysis. They can present objective for profit or new setups depending on the current market environment. Okay, so now obviously we are familiar with the fair value gaps. Okay, we are already familiar with fair value gap concept, because this is what the 2022 mentorship is, is built around, is built on. Okay, so these are fair value gap, and looking at this range from this low to this high, you will probably see that this is above equilibrium. Okay, so that's premium, and the willing buyers that are resting above these old highs are, they are willing to buy at high prices. Okay, so smart money are going to sell to those that are resting below here, fill this gap at the same time, and price, takes off the other direction. Okay, so now we're going to talk about the last thing we're going to be looking at on this is market protraction. Okay, specific times of the day, there are events that see a sudden move opposite to the daily range direction. Okay, this event is known as market protraction. It is referred to as a Judas swing. It is a micro expansion in price that seeks nearby liquidity before reversing direction. Okay, so now this is our opening price. Okay, market protraction refers to the movement against the trend of, against the directional bias for the day. Okay, in this case we have a bearish day, right? Then this move upwards above the opening price is referred to as a market protraction, and a common term that is used for it is the Judas swing. Okay, so this is our protraction. This is the movement against the direction, against the directional bias. Okay, so this is where we anticipate reversals and price is going to go off the other direction. Okay, so now the takeaway from this is that although we have talked about discount and premium a lot of times, a quiet number of times in the 2022 mentorship series, I just want to revisit it and, maybe probably talk more in depth on the idea. Okay, so the idea is quite simple. Okay, smart money are going to look they are going to look for new long setups, and they are going to be looking to buy back, or or add more positions to their already open positions, always in the discount sector. Okay, so we don't buy at premium, never you buy at premium. Okay, we always buy at discount. Okay, we don't sell at discount, we always buy at discount. Okay, so let's say the other way around to look at this is that, let's say you were able to get an opportunity, a counter trade opportunity right here. Okay, so the best place to get out of it is in the discount sector. Okay, let's say you sold here, you the best place to get out of it without, expecting the price to trade outside of this current range is below the equilibrium, is below the 50% level, which is in the discount sector. Okay, obviously at this fair value gap. So this would have been a best place to get out. Let's say you are lucky enough to get short here, this would have been a best place to, to take out everything and probably look for long positions. Okay, so we buy at discounts and we sell at premium. Okay, so if smart money are already, maybe they were not able to get in right here. Okay, so and they are looking to go short, they are going to be looking to sell at premium, to sell to the highest bidders, to, retail traders that are willing to buy at high prices, and that is going to come by way of buy stops. Okay, buy stops, or those that were lucky enough to go short here and they are going to trade their stop loss to this old high, sorry, and smart money are going to look to sell short to those buy stops resting above this old high. Okay, so now we know that we buy at discount and we sell at premium. So never you buy at premium and never you sell you sell at discount. Okay, so we sell at premium and we buy at discount prices. Okay, so now we already know what liquidity voids are, marketing efficiency, or rather the general term is imbalance. Okay, imbalance, and when this happens, price is going to, at a later time is going to seek to reprice this, going to seek to rebalance this. Okay, so no, now these are key points in price action that you need to take note of. Okay, so fair valuation is simply when price trades back into an already existing range. Okay, in this example we have this low to this high. Okay, so the process of price trading back into this is known as fair valuation. Okay, so and many times smart money is going to use this to establish new entry. Okay, so if smart money sold up here, let's say they sold up here, the best way the best place to get out is below the midpoint, right? Is in the discount side of the range. Okay, so that would be to sell to the sell stops resting below here, and getting out here, at the same time look to buy new uh long entries at the other block. Okay, so now this depends on your underlying trade, this depends on the current, your buyers. Okay, we don't just buy and sell, we have to have other factors come together. Okay, and as we go deeper on the concept, we are going to be looking at how to place, how to apply all these in a chart in our trading. Okay, so that is just that for this video, and if you have found this video resourceful, please do well to like the video, leave a comment, and please share with your friends. Okay, so this is your first video of actually first time of actually coming across this channel, and if this is your first ever video that you are coming across on this channel, please do well to check out our 2022 series. Okay, our 2022 mentorship series. Okay, and please subscribe and help us grow. Okay, thanks for joining us today, and see you guys in the next episode. Do have a great day and a great trading week.